Hello everyone, welcome back to my YouTube channel. In today's video, I will talk about did our stock market hit double bottom? Why double bottom pattern is important? Because it's a typical indication of a bullish reversal, which means investors can obtain profits from a bullish rally. So in today's video, I will look at 8 different groups of stocks. As well as the chart from Dow Jones, Nasdaq, S&P 500. 8 group of stocks, including coronavirus vaccine and treatment stocks, includes Johnson & Johnson, Abbott Laboratory, Mariner, Regeneron, Gilead, and also fan stocks, related stocks, including Netflix, Google, Amazon, Apple, Microsoft, and I will include the charts for your favorite stocks such as Tesla, Virgin Galactic, Beyond Meat, Disney, and then gold stock related stocks and ETFs like a GOLD, GLD, and NEM. And also we will look at the chart for travel stocks like Boeing, Southwest Airline, Carnival Cruise, Royal Caribbean Cruise, as well as Bitcoin related stocks like GBTC, OSTK, Square, and also I will look at the marijuana related to stocks such as Constellation Brand and then Canopy Growth, because Constellation Brand invested $190 million in Canopy stocks back in 2017. I want to look at these two stocks charts as well. And also I will look at coronavirus benefited stocks such as Zoom Video, Walmart, and Costco. Before I start it, please give a like and comment to the video. That will support my channel greatly, and then it will help with the YouTube algorithm. Without any further ado, let's get started. First, let's have a quick review of double bottom chart pattern. Double bottom is also called a W sign. Look at this. It looks like a W to you. It's a bullish sign. Double bottom consists of a neckline, which is a bottom or support line. Also, there is a resistance line across the left wing, the middle, and then the right side. And then the height of the double bottom from here, resistance measured to support line, the height of this will be added to the resistance to the top. So this height will indicate the potential target price, which will be at least the same, if not more, than the height from the resistance line to the support line. And then the most important candle is this candle. This candle is the breakout from the resistance line with the support of all these volume. So that indicates this kind of acceleration or the bullish move is backed by the volume. And also this is the typical point for the shorters to stop shorting, for the long investors to start long their positions, and then set the target price at least the same price from the height. For example, this is from $37 to $29 something. Let's just say 37 minus $29 is $8. So you have to set the target price about 37 plus $8, which is $45. But if you want to be a little bit conservative, you can set the price from $43 to $45, depends. So that's a quick review of the significance of double bottom pattern. Okay, let's first look at the major indicators. Dow Jones, Nasdaq, and S&P 500. Drag this chart a little bigger. This is a 3 months daily chart. So that means each candle represents 1 day. So let's click on Dow Jones. The chart pattern looks similar like the double bottom. However, it's not the typical double bottom because this side is way over there. But in reality, none of the double bottom really true look like a W sign. It could be having a little bit of variation. However, the major thing is this candle, it did not really go breakout today. Although around lunchtime, the Dow Jones went green, was positive 937 points. At that time, everybody think it was true double bottom, but it reversed at the end of trading. Look at here on 1217, it coming straight down. In the future few days, it's important you have to see either this one gonna go sideways consolidating, or it will go break out, or it will coming down this way. So we have to wait and see. Nasdaq sharing the similar pattern as the Dow Jones. We also have to wait and see in the future few days. It did not go break out. It's also stopped at around 1227-ish. Everything just stopped, bullish and bearish. And then S&P 500 shared a similar pattern. So we cannot define it's a double bottom until it's truly break out with the support of the huge volume. We have to see. So we cannot define it yet. Now let's look at the first group of stocks, which is coronavirus vaccine and treatment related stocks. First, let's look at Johnson & Johnson. We all know they're trying to the vaccine in few months. So you can see the chart is representing a true V-shaped recovery. So it's a very bullish sign of reversal. So this is very good for Johnson & Johnson. Let's look at Abbott Laboratory. Abbott Laboratory is because they created that texting kit can test people within just 5 minutes. So that's a big news. That's why they also have a V-shape recovery chart. This is also very beautiful for Abbott Lab. So then let's look at mRNA Moderna. This is a company, they already made a vaccine, but it's in the clinical trial. They haven't been massively produced and being used. So this is actually a double bottom shape. So this is one bottom and second bottom, and this is the support level, and this is resistance level. Actually, they had breakout slightly 3 days ago, but they retraced a little bit. So in the future few days, it's very crucial for this stock to see if it's true breakout with the volume backing up, or it will retrace. So we need to wait and see. And then let's take a look at the Regeneron, R-E-G-N. Regeneron is famous because they have a hydrochloroquine. This is the medication can potentially treat the coronavirus. So they are doing the clinical testing right now. So if you see this is a true W sign or double bottom pattern for this stock. So that's beautiful. They are really just at the resistance level, not truly breakout yet. This is the support level, and then this is the resistance level. If they can have a true breakout in the future few days, then the breakout will be huge, because the height of from here to here will be added to this resistance line. So we're looking at about target level of around this level, $589.26-ish. So we need to wait and see. Their volume these days are not huge, but still they have a MACD. There's a cross there, so it's a bullish sign. It will go up. Let's wait and see for Regeneron. And lastly, in this group, let's look at the Gilead, G-I-L-D. Gilead is famous for its a medication called Remdesivir. Remdesivir is a antiviral medication. It has been used in China and some in United States. It has treated some coronavirus patient and they recovered. So this is a huge medication as well. As you can see, this chart also a similar like the double bottom chart, but we still need to wait for it to have a true breakout. It doesn't have a true breakout yet. Instead, it retraced. So we cannot call it a double bottom until it's having true breakout. So that's the point we're waiting for. Second group, let's look at the travel related stocks. Let's look at airline stocks and then cruise line stocks. Let's see if they actually hit the double bottom. Let's look at the Boeing first, BA. Boeing actually has a shape look like a double bottom, but it has not reached to that point to break out this resistance line yet. So we have to wait and see. So Boeing is not a true double bottom until its breakout. Let's look at a Southwest Airline, LUV. Southwest Airline, also it's a long way to go to call it a double bottom, so we don't know yet. Southwest Airline is not that bullish at this time. And let's look at a Carnival Cruise, CCL. Carnival Cruise also has a shape look like a double bottom, but however, it's a long way to go. So we cannot call it a double bottom until it break out this resistance line, which is at around about $18.40. Till it's a true breakout from this resistance line, we cannot call it a double bottom. So let's look at Royal Caribbean Cruise, RCL. Royal Caribbean Cruise also has a shape looks like a double bottom. However, still until it break out this resistance line around $46, if it has a true breakout from here with a backing of all the volume looks great, looks very promising. And then this also has a cross. The black line is a bullish line, across the red line here it will go up. So this one has hope. Now let's take a quick look at the gold related stocks and ETFs to see how they perform these days. First, let's look at the gold miner stock, GOLD. It's a Barrick Corporation. The chart looks pretty promising. It recovered pretty good from the crash. So we cannot call it a V shape or U shape or W shape. It's just a shape that is going up. It's pretty good. So let's take a look at the GLD, which is an ETF for gold. This one I cannot call it a cup and handle yet unless it will form a cup and handle later. So but it's pretty promising from its highest to high. It's not too much difference. So gold group is very positive in this crash environment. Remember, I made a video time to add gold on March the 9th. So if you did listen to me, your portfolio would look very, very promising at this time. So this is for GLD. Let's quick look at another gold miner, NEM. NEM also recovered beautifully, just like a GOLD. This is their recent highest point, so it's pretty good. Next resistance level will be at a $56.60. So this is also a very promising chart. Now let's look at the fourth group of stocks, which is our favorite stocks like Tesla, Virgin Galactics, Beyond Meat, and Disney. Tesla stocks looks exactly like Dow Jones, atypical double bottom, but we don't have the breakout yet. So we need to see, although it has a positive volume these days, momentum is good, and then the cross is good for MACD. It has potential to go up, so as RSI. So we will wait and see. If it has a true breakout, then probably we can call it a potential double bottom as well. Virgin Galactics, similar like Tesla, it doesn't have that breakout yet. It's still further away than Tesla stock, so we need to also wait and see in the future few days how this one gonna perform. And Beyond Meat is also similar like these other two stocks in this group. So we need to see the breakout. It's not reaching to the resistance line yet, although the interest is increased these days. It has potential, but not breakout yet. So we cannot call it a double bottom. Let's look at the Disney stocks, DIS. DIS is also similar story. Let's wait and see until it has a true breakout. Now let's take a look at the coronavirus benefited stocks, which are Zoom Videos, Walmart, and Costco. Let's see how they do. Zoom Video, it was very good a few days ago, but since they have that potential lawsuit due to the security, violated some security when people log on to Zoom Video, so it coming down pretty much these days. So if you can see, there's a double top there. So I will show you the line. Not typical double top, but I can sense it's a double top. So it's not a good sign for any stocks. When you have double top, means the stock will go further down in the recent few days. And so as you can see, MACD has a bearish cross, so as momentum going down and RSI also going down. So Zoom video, the chart is not, unless you wanted to short the stock, and try not to long the stock at this point of time. Let's look at Walmart. Walmart has a beautiful chart. This is a very good cup and handle sign. Can you see that? Cup handle. Walmart is hugely popular these days because people wanted to buy the supplies from them online or in the store, because people want to prepare for social distancing. So this is a very promising chart. It will go up even more. Although the MACD shows it's almost overbought, it will go down, but it could be having a few more days going up still. Let's wait and see. MACD is overbought, and then momentum coming down only today. Today everything is going down for some reason, so we cannot use today as a reference. Let's see the future days, but this is a very prominent cup and handle pattern is forming. So Walmart chart is great. And then for Costco, let's see. Costco is similar like a Walmart. It's like a cup and handle. So it will go up in the recent few days. Look at the MACD, still have few candles can go. So as the momentum, it may go up. So as RSI. So the chart looks like, Costco chart looks like slightly better than Walmart, but both of them are great charts. Now let's look at the beer and then marijuana stocks. Constellation brand, major products is beer. So in this environment, when people stay at home bored and lost their job, maybe they want to drink a lot of beer. Plus, Constellation invested $190 million in cannabis stocks back in 2017. This is the first major company ever put the money in a pot stock. So that's why it gained the popularity since 2017. However, it did drop because of this stock market crash. Looks like this one is coming out of the bottom and try to push out, but we cannot call it a double bottom, although it's shaped like so. Today's candle, it looks bearish red candle, it coming down. So tomorrow it may even further coming down, but I still have hope because MACD is a bullish cross from the bottom here, so it looks like it will still go up. So as RSI, so as volume. So these days, Constellation brand gain lots of popularity. So let's look at a CDC, which is a cannabis marijuana stock. We will see if it will break out at this resistance level. It's not a breakout yet, so we need to wait and see. It's pretty promising. Look at the MACD and RSI. It looks pretty good. So in the near term, this stock may have further move up to the upside. Now let's look at the Bitcoin related stocks to see how they are performing now. GBTC. They're not exactly Bitcoin, but they trading Bitcoin in the background. So this one also has potential to break out, but did not break out yet. In the near future, it has potential, but we will see. OSTK. They are also at the resistance level. However, we're waiting for it to break out. This chart pattern looks stronger than GBTC. We will see. Now take a look at the Square. Square also has a potential of breaking out at this resistance level, but we still need to wait. Now let's take a look at our fan stocks and its related stocks. First, let's look at the Netflix. Netflix has a pattern, looks like a V-shaped return. So it's very good pattern, very promising. It's already near its high before the crash. So this is a very good stock chart pattern. Remind you, Netflix last decade, it was the best stock ever in the last decade. Let's see this decade how this one gonna perform. But recently, This one looks very promising because people stay at home. They watch a lot of Netflix film. So it will be strong in the earnings. So now let's look at Google. Google. Google, not as good as Netflix, but looks like an L shape to me. Probably will consolidating in this range for a while before it's recover. So Google stock is not the best one. Amazon, let's take a look at Amazon. Amazon stock is gradually recovering, not as fast as Netflix, but it's still not bad. Considering its business model in this environment, it may not affect too much of this Q2, Q3, Q4 earnings in the future. Let's wait and see. Apple stock. Apple stock doesn't look as strong as Netflix or Amazon. So it's similar look like Google stocks. So Apple stock in near term is not that strong somehow. Although the MACD momentum and RSI they are pointing upper momentum, but let's wait and see. We don't know. This pattern is not very much promising. And then let's look at Microsoft, our last stock today. Microsoft looks recovering pretty good. We can call it a potential V shape. We still need to see in the near term. It looks a lot more promising than Apple and then Google. It also has a ex-dividend day coming in May 20th. So between this point to May 20th, we still will see probably up and down a little bit, but eventually will go up. So Microsoft stock pattern is not bad at all. This ends today's video. Is the stock market as a whole hit double bottom? We still cannot call it yet. We have to wait and see. But we still see a few stocks that show the pattern of double bottom, such as coronavirus treatment stocks and vaccine stocks like mRNA, like Regeneron, like Abbott and Johnson & Johnson. Also, the gold stocks and ETFs shows some promising feature. And also Walmart, Costco benefited from the coronavirus. Their stock chart pattern looks great. On the other hand, Netflix, Microsoft shows some bright spot for you to trade in the near term. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.